Good morning, everyone, and thank you very much for joining. Apologies, I'm late. We've had some power issues, and I've just been running around just trying to set up so we can do the DAX webinar. So my apologies there. But thank you very much for joining this morning. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and today is Thursday, and it's the 18th of November. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments, and then I'll bring up the commentaries disclaimer. Okay, let's bring up the commentaries disclaimer, and just finally, the reference on screen will be MarketScope 2.0, and I'd like to go through the CNBC morning note as well. So let's go ahead. I'll just bring up the chart. I'll change this to the DAX, and what I'll do is just bring up my morning note. I'm begging your pardon. I'm just rushing from one side of the city to the other. Okay, I am. Okay, so European stocks expected to open around the flat line today, and that's amid market concerns around region's inflation. That open for European markets comes amid investor concerns over the inflation outlook in the region. Data released on Wednesday showed Eurozone inflation at 4.1% year-on-year in October, more than double the European Central Bank's target. I looked at it on a core basis. We're about 2% on a core basis. That's to strip out all the volatile items, which is generally what the central banks make their decisions based on. The rhetoric coming from the ECB is still on the dovish side, so they're pushing back on calls for rate hikes. In its biannual stability report published Wednesday, the ECB warned of stretched valuations in property and financial markets as the region continues to recover from the COVID pandemic on the back of ultra-low interest rates and massive stimulus measures. Then we go across to the UK, and there we had a massive core reading, close to 4% on a core basis, well over 4% on a headline basis. It's at its highest in almost a decade, and this is going to certainly be adding pressure to the Bank of England come December. The monetary policy hearings on Monday, Governor Bailey did say that he just wants to double check the next data point for employment as the furlough schemes come to an end. So we'll keep that in mind. And but I would imagine those employment data points are going to come in really strong, and I would imagine that the rate hike comes December. I'd be extremely surprised if it didn't work out that way. US stock futures were flat in overnight trading after the major averages pulled back on Wednesday. Asia Pacific markets traded mixed on Thursday, and that was following the overnight losses on Wall Street, as shares in Japan, Hong Kong, and China struggled for gains. Global markets will be keeping an eye on the latest economic data out of the US on Thursday as we get the jobless claims. It's definitely trending in the right direction. We just want to see what that the trend continues. I was listening to the Bloomberg this morning, and this actually really surprised me. The next paragraph reads, on the data front in Europe, new car registrations for October were down 29%. So that's an extreme drop. So just wanted to mention that as well. All right, with that all said and done, let's just take a look at, let's get a look at the, Sorry about that. Let's get a look at the DAX here. And oh all my tabs are missing. Okay, that's strange. We'll just do a work off this chart. All right, so we've got this reference candle here, and we've got this leg that we've seen move up here. And now we're looking for the peak over here. Okay. I think the fact that we're starting to see some softness come into the markets at the moment perhaps suggests we should just be on the lookout for some pressures in terms of a correction. I think that is exactly what the DAX needs. Whilst as swing traders, we want to be trading with the trend, but we have to be disciplined and patient as well. Understand that the pullback here is setting up a potential higher trough. And once that takes place, we've got the trend going. So having said that, the idea here is softness in the Asia session. We'll see how it pans out today. We're going to go down into lower time frames in a moment, but any softness that we start seeing, I would be looking very carefully to see where the support comes in. Let me just bring up I'll bring up the insights layout here. Just it will help us with the rest of our analysis. Okay. So we've got two charts here. The left chart is our daily chart. The right chart is our hourly chart, clearly both DAX. I want to take a look at the hourly first, okay, because the hourly actually is looking very interesting. It's looking as if we're getting a bullish trigger. And again, if we get the angle and separation in the EMAs, okay, we see the angle in the EMAs, the stochastic making its way through to 80 is ideally the next step. However, now let's go to the daily. Okay, so on the daily chart, you're overbought. So this is, to me, getting to a point where there needs to be some sort of normalization. We've just read on the CNBC morning note, Asia Pacific had a rough session. Hong Kong was down, Japan was down, China is down. I don't know if that's going to flow over into the European session. Usually there's some sort of continuity, not always. But the fact of the matter is we have that Asian bearish sentiment at a time when the DAX is overbought as well. So I think that just like we mentioned yesterday, if you're looking to trade this setup on the hourly, you've got to understand the environment that you're trading in. It's a frothy environment where some bearishness is starting to kick in. So the idea here is stop losses must be very much in the forefront of your mind. Risk management must be in the forefront of your mind, and make sure, okay, that you're not over trading. The position is not a huge, massive position, because if the DAX decides to normalize and you're on the long side of a trade, that can be swift and brutal. So just the obvious question is, well, Russ, shouldn't we then be looking for a potential short? And the idea is that yes, there are traders that do fade these overbought trends, and there are strategies and methodologies out there. I can only give you my opinion, and my opinion is if you are trading against momentum, you're going to get hurt. And I think that the momentum here is to the upside. So if you're going to short, it may work out for you. It may work out for you. But if you continually find yourself trading against momentum, at some stage, the position is going to get pulverized, because markets are going to do, we make the analysis, and then the market either cooperates with the analysis or not. And yeah, the risk to reward's not good here, in my opinion, Pete. So you can see we've got this this froth over here. All right, so that's where we'll leave it for this morning. If there's any questions, please go ahead and type those through. Apologies that I was late this morning, but as I say, we're having some power issues. All right, nothing coming through, so let's conclude here. Thank you very much for joining, and I'll be writing articles today, but I'm going to post the links onto Telegram. Thanks very much, guys.